So lesson 2 in chapter 1 is titled The Accounting Equation, and the accounting equation is very important for everyone to know. The accounting equation is never going away. It's always going to be a part of what we do, not just in this class, but for all accounting professionals and even just business people. You have to know the accounting equation to understand how businesses present their financial information. So the first thing we have to know is a couple of definitions. And the first one is asset. An asset is anything that we own. Whether you're a business or a person in your own personal lives, anything you own is an asset. So if we were talking a bit about a business, like whatever that business might be, you can think about a small business around here, or you can think about a big company like Amazon or Apple. Some of the things that we typically own are the cash that we have in the bank, supplies that are used for operations, inventory, so the goods that we sell, equipment, and property. Those are all common assets that businesses have. Now, there are a couple of other things that are going to come up in our lessons that are considered assets that I want to go ahead and tell you about now. One of those that you're going to see is prepaid insurance. So what prepaid insurance means is when we buy an insurance policy for a whole year and we pay the whole premium up front, that is considered an asset. We own the rights to that policy. Now, there's one more that's probably going to be unfamiliar, and it's a thing called accounts receivable. And you're going to see me abbreviate this as AR. Accounts receivable is any time we do work for someone or provide a service for them or provide goods for them, and they have not paid us yet. So we are going to be receiving that cash later from them. That's an accounts receivable, and it's an asset, and our business owns the right to collect that money later. So that's an asset. Those are the typical assets that you're going to see. The next definition that we have to know is liability. And a liability is anything that we owe. So if I borrow money from the bank, that's a liability. If I use the services of like an accountant or a lawyer, or if I run an ad in the newspaper and I haven't paid for it yet, that is a liability. I'm going to have to pay for that later. And so we call those liabilities accounts payable. That's the most common liability that we're going to worry about right now is accounts payable. We could also have salaries payable and notes payable or loans payable, mortgage payable. But the big one that we need to worry about is accounts payable. And then finally, the last definition that we need to know is owner's equity. And that is the residual. Now, what does residual mean? It means what's left over that goes to the owners. So we look at what we own and we compare that to what we owe, and whatever is left behind is the owner's equity. So let's say, I used this example in class, let's say you bought a car for $10,000. So that car is an asset worth $10,000. But you owe the bank, because you didn't have all $10,000 to pay cash. So you borrowed $7,000. So you have a liability to the bank for $7,000. So if I were to ask you how much equity do you actually have in that car, you have $3,000. That's your equity. Now, as you continue to pay off what you owe the bank, your equity in that car is going to increase. So for business owners, they look at how much do they own in total, and they compare what they owe, and anything left over is their owner's equity. Sometimes it's also called book value. Or if we're talking about personal statements, it might be called net worth. So this accounting equation gets moved around for purposes for all of the transactions that we're going to record. And we say it like this: assets equals liabilities plus owner's equity. So that whatever we own, either we have lenders that have an equity in it, or we personally have equity in it, or our business has equity in it. So assets equals liabilities plus owner's equity, that is called the accounting equation, and you must know it. It is never going away. So I highly recommend that you commit it to memory, and we will do some activities to try to help you learn it. But the accounting equation is assets equals liabilities plus owner's equity.